We're entering a hyper growth phase where we're going to see triple digit growth for quarter after quarter after quarter.
From momentum stocks with tons of growth still ahead,
Triple digits for the next 2 years, accelerating from 150% to 200%.
to pullbacks on solid companies with huge upside potential.
Stock is very deeply undervalued still, down to critical support levels where I think it's a great buy.
MarketBeat's Thomas Hughes shares his list of 5 stocks that are strong buys this August.
All the stories for this stock are coming into alignment now.
Will any of the names on this diverse list of stocks make your buy list this month? Let's dive in. Tom, it's great to have you back on the show. Again, it's another MarketBeat in the Mountains day. We're in the mountains all this week, recording remotely, so the studio does look a little different than normal, but the content is all still the same. Thomas, it's one of our favorite monthly segments, looking ahead to your stock picks for the month ahead. We'll be wrapping up earnings, so interested to see what happens with some of these stocks. I do want to dive right into the first few names on your list because they're really interesting ones. So
Right.
let's get to the first company right away, Thomas.
Well, it's Chipotle Mexican Grill. They reported earnings towards the end of the month. A good report, but the comp sales were weak, and so the stock price kind of tanked. Fell down to critical support levels where I think it's a great buy. Now, in the article that I wrote about Chipotle specifically, I quoted our other author, Chris Markoch, because he has this great outlook on weak comp store sales, and that's just that they are kind of like insider selling. If there were some market participants that wanted an excuse to sell, it gave them one. What I'm seeing right now in the market, though, is the stock price has fallen down to critical support level while the company's building leverage. Comp sales were weak, but that's a now problem. It's a macro problem. It's not a fundamental problem. Fundamentally, the company is sound. It's still building out its store count network. So when the macro is fixed and the consumers start coming back, they will have improved leverage for comp store sales growth. So we should see a nice big acceleration in their revenue and their earnings in the next couple of quarters. But long term, the outlook is still very solid, very sound. We're looking at sustained double-digit revenue growth long term. Stock is very deeply undervalued still. So I say this pullback is a really an opportune buying opportunity.
Yeah, I think there's definitely some investors who are like you looking for those pullbacks and those really good buying opportunities on solid companies. There's others who are questioning why has Chipotle had such a really tough year? Why has this company been on such a downtrend, especially after a year that was really bullish? So go into the details a little bit more of why you feel so strongly that Chipotle really does have solid fundamentals and will recover well from where it's at right now.
Well, right. So with the stock price, the last couple of years has been struggling because the company had a very strong growth period. The comps have been tough since then. Part of why the comps were negative this past quarter was because last year it grew 11%. So in the 2 year stack, it's still up by 7%. Still a very good, strong number. We've also had a CEO transition. Brian Niccol left, gave the market reason to take pause. At the same time, there was a stock split, gives the market reasons to consolidate. So we've been consolidating. Within that consolidation, this weak comp number gave the market another excuse to sell off. But again, we're still within that solid fundamental range, that solid stock price trading range, because the fundamental outlook is so good. The company has no debt, a very healthy balance sheet, is self-funding growth, growing its store count by double digits annually, forecasting another year of strong growth. It's leaning into an international expansion that could quadruple the business size in like 10, 15 years. I mean, huge, huge growth opportunity. Any price pullback in this stock is really a chance to buy it. Brian Niccol leaving was certainly a cause for concern, but the CEO that took over is well versed in the company, was very central to Brian Niccol's strategy. So it really was a very smooth transition. To me, it was hiccup free. So now it's just a matter of time for the comp sales to come back into alignment. I think that stock price will be rocketing higher over time.
I like to ask with each of these when we do these monthly stock pick videos, why August? Why now? Is it really just where the stock price is? Or is there anything fundamental about this company that heading into the fall is a good time to buy?
Well, it's just all the stories for this stock are coming into alignment now. If it wasn't Chipotle, it would be some other company. That's the point of this article, is just to look around what companies are good, what companies are in a good position to be bought now. And in August, it's Chipotle.
All right. Well, speaking of Brian Nichols, let's move on to that second company on your August buy list.
Yeah, that's Starbucks. That's the company that Brian Niccol moved to. These two stories aren't tied together in any other way except for that. There's a transition period from Chipotle's new CEO, the transition period for Starbucks with its new CEO. But his transition is gaining traction. He's doing a great job with the company's culture, reinvigorating comp store growth, and they're trying to divest some of their cumbersome assets like the China business. So they're really getting this company set up where they can focus on the core, focus on what they do best, which is to serve coffee, do it well, like Chipotle does. The thing that Brian did so well at Chipotle was unlocking the flow through. They had this great business model, they had this great product. People weren't going through the operation fast enough or efficiently enough. And so he's working on that. I expect to see some really major, significant changes in their operating metrics beginning possibly this quarter, but within the next couple of quarters, as all of these things gain traction with the business. I think this is a great buy right now. The stock price is kind of rebounding from some lows. Analysts are getting on board, leading it higher. So all we really need now are some positive news developments, some positive earnings reports to kind of catalyze the market and invigorate that buying.
Yeah, we're going to go over the stock chart a little bit for Starbucks right now and why the price action is a good time to buy this month. Just speaking from a consumer standpoint, when you go to local coffee shops on this travel trip that I'm doing right now, sometimes it's great to try those new coffee shops, but you can wait for 20 minutes to get your coffee. And that's where Starbucks really stands out. You know what you're going to get. And that process that you were just talking about is so fast. You can
All right.
order and have that drink ready right away. How big of an impact can a small change like that in a company's operating system really do to their stock price?
Oh, it could do quite a lot. The reason why Starbucks' stock price has been having so much trouble for so many years, the reason why they've had 2 new CEOs in the last couple of years is because the company had gotten away from its roots, had made the menu too complicated, too many choices, too much food, too much focus on digital orders, on just fulfilling digital orders, that the business was getting jammed and clogged. And so customers weren't coming, they weren't getting through fast enough, they were becoming disgruntled, they weren't coming back. So what Brian's going to do is to fix all of those things, make it so that customers can come in, get what they want quickly, not have to wait, not see other people come in ahead of them and get their drinks when they've been waiting already for 5 or 10 minutes. Really just unleash the flow of traffic and the flow of money so that the company can generate revenue and then efficiently convert that into profits.
Yeah, small changes and a small rerouting that can have a really big impact on a company like Starbucks that's already so huge. Let's look at the stock a little bit more. Why now in August? What's been happening with Starbucks stock?
Well, so the stock has been in a trading range for the last couple years. The last 2 months, we've seen a pretty solid rebound from the April lows. I would say that the April lows were a good test of support because it moved down to the low end of the trading range, but actually rebounded before hitting the very low end. So what we have here is support at a higher level. Since then, the market's been rebounding. We're consolidating now right around the 94 level, which is coincident with all three of the moving averages that I follow, which is the 6 day, the 30-day, and the 150-day, which shows a pretty broad amount of support between near term, short term, and long term traders. Assuming that we get a good report with this report that's coming up, I would expect to see the market continue to rise, potentially retest the top of the range near 110. If it's a great report, we'll probably move to new highs pretty soon. But if not now, if not this quarter, then within the next 2 to 3 quarters, I think that we'll be seeing new highs above 110.
These first two picks may be down stocks, but they clearly have a lot of potential ahead and are very strong companies. It's a lot like our latest premium article list of the top 5 undervalued dividend stocks with strong payout potential. This is an article just for our premium subscribers, but you, as a YouTube viewer, can read this list for free on marketbeat.com. You just have to scan the QR code or click the link we have for you in the description of this video to get this list right now and add some other really strong companies with strong payout potential to your portfolio too. Well, Thomas, the first couple of stocks on your list were down stocks, but the next one is far more of a momentum play with a lot of growth already happening.
Yeah, that's Amprius Technologies. We've been talking about them a lot lately. They've got a lot going for them. I think that this stock really has quite a long way to go. End of July, we had a little bit of a price pullback, which I think is a good buying opportunity. Maybe wait to see what the market's going to do, see how deep that pullback goes. I don't think it's going to be very deep, but once we see the market start stepping back in to buy again, I would definitely pull the trigger on this one and add to my position.
If you've watched a lot of our videos, you've seen us talk about this before, but for those who might be seeing this video for the first time, what about this company makes you so excited? What sets it apart and makes it on your list of stocks to buy and stocks to watch quite often?
Well, it's a market disrupting technology. Their silicone anode batteries are still traditional lithium ion, but the silicone anode provides better durability, better energy density, and higher discharge rates, makes it incredibly important, incredibly applicable for industries like aerospace and drones, which need to be able to stay up in the air for quite a long time with a high, reliable output. Um, the more I'm thinking about this company, the more I like it because with 5G and AI coming to the fore right now, we can expect the Internet of Things to really take off. Internet of Things is going to be driven by all these remotely operated robots, which are going to want to use all these really awesome batteries. So, meanwhile, Amprius production capacity has been ramping, their sales are ramping, their deal volume is ramping, the backlog is ramping. We're entering a hyper growth phase where we're going to see triple digit growth for quarter after quarter after quarter for several quarters, possibly 2 or 3 or 4 years. And the stock price is still very, very low. Right now, we don't really have a good, clear idea of how much money they can make because theoretically they could upend the entire battery market.
You almost answered my last question. I want to get into it a little bit more, and that's
Uh,
how much growth could this company possibly have? If you look at their stock chart, you know you've seen a lot of growth in just a short amount of time. And that sometimes gives investors pause of, is there a bigger pullback coming? Did this company get too big too fast? But it sounds like you think that there is tremendous growth potential still ahead.
Right now, the consensuses that are being reported on MarketBeat's website is triple digits for the next 2 years, accelerating from 150% to 200%. Beyond that, we're slowing down to the high double digit range. But even then, we're talking about 65, 75% growth sustained for quite a few years. It looks like this company is going to grow by quadruple digits just within the next 5 years. And it's very possible, highly likely, that these outlooks, these forecasts are too low.
Yeah, all good reasons why this company continues to be on your radar and continues to make your list of stocks to watch right now. So, August is a good time to buy because you want to get in ahead of any more of growth to come. So, even if the stock is up a little bit or down a little bit, getting in now is still pretty early for this one. Let's move on to the next name on your list. And this is another company that you've been really bullish on for a long time, even though in the last few months it hasn't had a very bullish stock story.
Right, that SoundHound, end of last year, we saw a really huge, vibrant stock price surge based on the outlook for this company's growth. Since then, the stock price has corrected. We've been putting at a bottom. Looks pretty bullish to me right now. Possibly see some sideways action for the next couple of weeks or months, depending on the upcoming earnings report. But this company is also gaining traction. Right now, we're in the early innings of the second wave of AI, which is the application of agentic AI. SoundHound is very central to that. Not only is their voice activated services very unique and market leading, they're also actively acquiring new businesses to kind of flesh out and flush out their voice actuated services and the industries that they can serve. At the same time, they're expanding into new industries, into new verticals. They're building out their client base. They're deepening penetration of services with the clients that they have and really building a platform for accelerating growth. As far as their growth outlook, we're looking at another company that's forecast to post triple digit growth for at least the next 2 to 3 years. So a very solid hyper growth phase is ahead of them. And again, it could potentially be too cautious. So we're expecting to see some outperformance in upcoming earnings reports that could really help juice and catalyze the market.
Yeah, this is a really interesting company with so much potential. Yet it's hard to ignore why the stock was on such a downtrend recently. Let's talk about why it went up so quickly and then had that really strong pullback that lasted quite a while. What do you think was behind that?
Well, really, it's the outlook. So, mid to late 2024, the outlook for earnings growth, revenue growth really got supercharged. The business was gaining traction. It was really showing evidence that this long-term outlook was realistic, and so the stock price surged to these highs. But like most markets do, it was pricing in every bit of potential growth well before the growth happened. Short interest, short sellers took advantage of it. Profit takers took advantage of it, drove the market back down. But as I was saying before, that correction brought the market back to a very critical support level where support is very strong. We're building that support base now. We've seen two little bounces since the April lows that are confirming support levels are kind of rising. Right now, all the moving averages are pointing higher, which means that short term, midterm, and long term traders are all buying the stock. So, assuming that we get a good report, which is what we're really expecting to see, SoundHound stock could be testing resistance at 15 pretty soon, breaking out to a new high, moving back up to test 18 soon after that. And then within the next, 2 quarters, 3 or 4 quarters, be back up to that 2250 level that it hit last year.
All right, a good analysis on SoundHound. Let's finish out your list of 5 stocks to buy for August with a new name, one we haven't really talked about much on this channel before.
Right, that's Northrop Grumman. Um, and this is a different stock for this segment because this is more of a buy and hold name. This is a dividend paying stock, but well positioned within the defense industry. The thing that I noticed in the last month, reading into all the earnings reports, is that all of the defense stocks are well positioned, but most of them are facing macroeconomic or company specific headwinds that impacted their growth or their outlook, specifically their earnings, except for this one. This company outperformed and raised guidance, gave favorable outlook, has a growing backlog, has just received several favorable contract wins, and all of this news was well received by the market. The stock price shot up pretty significantly after the results were released. Hit new highs, has been able to sustain them. If you look at this chart and the long-term view, like weekly or monthly bars, you'll see that we've had a very strong uptrend followed by a triangle consolidation that was just broken to the upside. So from a technical perspective, it's a pretty strong signal that could result in this stock rising by $100 within the next couple of months and several $100 over the next couple of quarters.
And that's a pretty big growth for a company that is already pretty big itself. I think, it's interesting we haven't covered this company much on this channel because it's a familiar name in the defense sector. Why now? Why are we seeing so much growth in this company specifically right now?
We're seeing some growth in this company right now because of its contract wins. Its technology is favored not only by our own, but by international governments. The Trump administration has been helping them to expand their sales into other favorable governments. So the growth outlook has been amplified. The earnings outlook has also been amplified, which is really crucial for all of these stocks, all the defense stocks, because they're really cash flow machines that pay dividends and buy back shares. So right now, what we're seeing is this stock or this company's growth outlook is being amplified, but the market is really being supported by this outlook for capital returns and share count reduction and dividend payments.
Yeah, all individual factors for why this company is doing well, but I feel like this is a good August pick simply because of how much investment we're seeing in defense right now. It seems like this whole sector is one of the fastest growing sectors in the market.
It has been pretty hot this summer. That has a lot to do with the Trump administration. They're planning to really boost defense spending next year. That trend will be seen around the world. A lot of the focus is going to be on next generation technologies like Northrop Grumman focuses on digital, unmanned systems, drones, things that give us an advantage without endangering lives.
Another interesting pick and a really great list of 5 companies to look into buying this August. Thomas, thank you so much for doing these lists for us every month. I know I enjoy them. Our viewers enjoy them too. We'd also love to hear from you. What are some of the stocks that are making your buy list for August, or at least ones that you're watching this month too? And let us know which of Thomas's stock picks for August make your watch list too. We'd love to hear from you in the comments. Thanks again for joining us for this edition of Market Beat in the Mountains. As always, happy investing.